Hello and welcome to another daily market update by Market Intel. My name is Ben and today we want to take a look at a chart that is on its way into a trading area. The chart is currently in a correction. Always interesting for pullback traders, and it is the Apple chart. Let's go. Okay, we're on our website, dailymarketupdate.com. It's our Market Intel website. You can register completely for free. Link is in the description. Then you get access here to these tech stock updates, but also crypto updates. And today we want to take a look at the Apple chart first, the one-day time frame, then the two-day chart. So we start with the context and then take a look at the shorter time frame. So you're going to get a very good idea of where we might be heading. So let's start with the daily time frame. And you can see that here for Apple, the idea is that first of all, this is a bullish chart. This is a bullish structure we're tracking. Why or how can we say that? Well, from an Elliott wave point of view, according to our analysis, according to our roadmap here, the price is likely currently in a so-called wave 2 correction. So idea is that a more substantial price top formed here very recently. That was early 2025. And we're now on our way to the trading area, support area located between $179.73 and $200.65. So any break below that trading area could increase the risk of a much larger correction. So for now, we're tracking lower prices anyway, right? I think it's important to understand that we're tracking lower prices right now, and the price should get towards this trading area between $179.73 and $200.65. It's a standard retracement area, a standard support area for such a wave 2, which is just a pullback in an overall uptrend. At least that is how we're tracking it. That's what our roadmap says. That's what our analysis says. Yeah, any break below that area, however, increases the risk that we are dealing with a much larger wave 2. So the idea would then be that the wave 2 that presumably bottomed last year around April-May time at $164, that it never finished. So let's say it like that. The break below $179, should it happen, if it happens, it's a big if, then it will increase probabilities for a larger wave 2. At the moment, those probabilities are around 36%. So they will increase then. For now, it is preferred, obviously with a probability then of 64% that the price is turning around and we are moving higher, and would start a third wave that could take us to $400, $500. Bear in mind that a third wave is typically the most aggressive wave in a trend. It's the most aggressive move. In this case, it would be a third wave of a third wave, which is even more aggressive. So that's what we're tracking here in the, let's say, scenario in magenta, where we should get a third wave, and a break above that January high is needed to confirm that further, of course. But for now, the focus is on lower prices. If we get below $164, next support afterwards or below would be around $124. But if there's something that becomes clearer, we can probably add an alternative trading area for this dark green wave 2. Let's take a look at the 2-hour time frame. Here you see it with a little bit more detail. Also here we have an alternative scenario. Primary scenario would be that the price is now selling off into that region between $179 and $200. That would be a Y wave. We have a wave W to the downside, an X wave up, and we're now moving down in a Y wave. That means we could get a bit more of a well-defined 3-wave move down as well, because a Y wave is a 3-wave move. It's not impulsive. So the idea would be that, hey, this Y wave down, expect some bounces here and there maybe. It's probably not going to go in a straight line, can do, but it's just about managing expectations. It could very well be that there will be a bounce before we go down and reach this trading area. Alternatively, the price is already completing the wave 2 here somewhere, but when we have a correction like that, it is normally more probable that the price defines or forms a clearly defined low, that we get below this first leg of the correction, so that the Y wave ends somewhere below the W low. Okay, and they have typically sort of the same length. Sometimes the wave Y is even a little bit longer. But obviously even here with a probability of 32%, the low is already in, but that is quite low. It's not zero, but it's quite low. So expectations are or let's say probabilities suggest we should go a little bit lower. It's all based on a model, it's all based on probabilities. And here in this case, the preferred interpretation has been assigned a probability value of 68%. So we should go lower towards this magenta trading area. So pressure is down in the near term. But as soon as we get above this X wave high, then probabilities start to shift. Then we have to really assume the low is in, and would then probably expect an upside breakout a little sooner than expected, than originally expected. Yeah, that's the update about Apple. Hope you enjoyed the update. If you did, please hit the like button, leave a comment and subscribe, and also register for free on our website to get all of these Elliott Wave updates on a daily basis. Thank you very much. Bye-bye.